Cool. I think we'll kick off into the webinar and panel discussion. So I'll just do a quick introduction. So my name's Logan, co-founder of Landlord Studio. Glad you've joined us all today here. Today's session is going to be a little bit different to what we usually present. Really excited to have two great and wonderful people joining us today to talk through making tax digital. Kate Faulkner, UK leading property expert, and Martin Wardle is also a UK property tax specialist. So great to have you both here. Really appreciate your time and looking forward to getting some discussion out of some of the questions we have for today. So just to sort of set the scene a little bit before we get into it. So MTD, again, recap, making tax digital came into effect April this year, 2026. And now we're actually past that first quarterly deadline. So that was the 7th of August. That was the first quarterly submission that was due for the 50K threshold. So it's very much alive now. And yes, we are seeing lots of feedback from the industry, lots of people going through the process. But just coinciding with MTD's changes, last month we also ran a survey with 500 landlords and agents on making tax digital. And we pulled together the findings into an industry report. Scan the QR code if you want to go check that out. But a lot of the stats that came out of that report is what we're going to be covering off today, just to dive a little bit deeper into those as well. But one theme that really jumped out was the confidence that landlords had on making tax digital. And most aren't actually as prepared as they think they are. So there's a real gap between feeling ready and actually being ready. So that's the gap we want to explore today and what we want to dig into. So what our panel discussion will cover off is, basically the feeling of being or feeling ready for MTD versus actually being ready for MTD, knowing which group you're in, which threshold you're coming in, the hidden cost of getting it wrong, quite important one, and the most common MTD mistakes plus the fixes to correct it. And then lastly, how to genuinely be making tax digital ready and the next steps to take. And we're going to have a live Q&A at the end as well. So just drop your questions into the chat as we go, and we'll do our best to answer those throughout, but also we'll spend a little bit of time at the end. And just quick disclaimer, while we live and breathe property management and accounting at Landlord Studio, I'm not a qualified lawyer or qualified tax advisor. I'm hosting this session today, but treat this as purely educational purposes and based off our understanding of the latest HMRC guidance. And if you do any specific questions about your tax situation, please reach out to a qualified tax professional or accountant. So without further ado, want to jump into one of the first statistics of 94% of landlords feeling confident in MTD, but actually only 33.6% have actually gone digital. And this was from the survey we ran. And I guess I wanted to start with you, Kate, to start with. From these stats, what is this? What is this telling you? Do you feel there's the confidence in the industry, who you're speaking to, with the different shows that you're attending? What do these sort of stats say to you, and do they line up with your sort of expectations?
Yeah, so I think there's a big difference between being sure that you're ready and actually being ready.
Getting a little bit, not getting the sound coming through for you, Kate, unfortunately. Let me
go to Martin.
Yeah, let's try Martin. And Martin will, maybe start off with your question here. If you got some headphones, Kate, I don't know if they're working. But yeah, I'll get your view on this, Martin, first.
Can you hear me, first of all? Is it a Kate issue or a bot? Right, okay, sorry. So I think what's interesting here is it, there's a clear disconnect in that a lot of people say they're confident, and that's what we're talking about, but yet aren't actually ready for MTD. So I don't know if that just means people understand what they're meant to do, but just haven't done it. I suppose it could be that. But then, as we're now speaking after the deadline has passed, I'm still meeting people. Saw someone yesterday, 30 properties, hasn't done anything at all towards MTD. So now they could, I suppose, have been confident in what they had to do and just not done it. I would suggest if you were confident in what you were meant to be doing, you probably would have been also ready and doing it. Um, Now, what I don't know really is there isn't really any proper statistical data on the number of landlords that are now in MTD. We know from HMRC, I think it's about 800,000 people who should have done a quarterly update. Whether or not that represents 6% of landlords, meaning that the other 94% are confident that they're next year, we don't have that data. But the reality is, I think there's possibly a lot of people saying, yeah, we understand what we've got to do here, possibly just a little bit naive as to what's actually involved. Certainly, the people that have presented to me have said, well, we know we've got to do something like this. Is that it? They kind of go, not really. It's more than they thought. So yeah, I don't. I yeah. I was very surprised that 94% of people responding as confident.
What do you think being ready actually looks like? Obviously, we know that choosing software is a big part of that, and actually, doing everything that's required. But what does that actually mean? Like, what is
Well,
that?
I think you can distill it into a couple of things. I suppose the first thing is knowing categorically if you are in this quarterly round. So, like I say, there might be a load of people out there who don't have 50K of relevant income, which is self employment and rental income, of course. So, they might say, well, yeah, I'm on 30. I'm confident that I'm ready in that I'm next year. So if that's you, then yes, you could say you're confidently ready. If you're in this quarter, then you should have registered before the 6th of April. We know from HMRC that by the end of June, only a third of people had actually registered. So there was, literally 500,000 people who should have registered pre-April who didn't. So again, I'm not sure they can say they're confidently ready when they're not doing it. And then the next thing is you need to pick your chosen tool, your software, and that should really be based on your specific circumstances. And I know I've met a lot of landlords who are trying to battle on with full accounting products like Xero, QuickBooks, Free Agent, because their accountant has said that's what I'm comfortable with, so you should use it. And, yesterday I was speaking to someone who'd been in tears trying to do full accountancy products for someone with 4 rental properties, 4 basic residential properties. And they
Hmm.
weren't really getting any support. So I don't know. You should have registered or worked out whether you need to register, picked your software, should have had your data on there before April so that when you got to the end of July, it was ready just to submit. That's what I would say. That's the criteria.
Yeah, and for those sort of listening in today, I'd love to know who's in the first wave for making tax digital, or if you're sort of, just tuning in to see how it's all going to roll out for next year. But if you are in the first wave, drop a message in the chat. Would love to yeah, see who's coming in. But we've got Kate back. I was just sort of talking to Martin about this confidence gap, where he's hearing a lot of landlords that are confident or appear to be confident from these stats, but in reality, a lot of these conversations he's having day to day are revealing otherwise. So, we'd love to, I guess, Kate, maybe fill in that gap a little bit from some of the conversations you're having at road shows and things.
Yeah, so I think one of the biggest things is there's a difference between being sure you're ready and actually being ready, accurately knowing the tax rules. And I'm going to be really honest, I'm really bad at admin. You'd never let me loose on lettings administration. I let somebody else do it. So I love a system that can manage it for me, or an accountant. But the system takes time to understand, as does making tax digital and getting everything done. And also, I think we get into a way of doing things, and that doesn't necessarily keep up to date with tax rules. And it's easy to miss things that we claim for. And finally, I think even if you are doing it right, you're going to have some questions, and it's important to have somebody by your side that can answer those questions for you. So I think that's where I'd kind of add the bit of a difference. It's actually just saying, yes, I can do it because you've put in tax returns before. It doesn't mean you can do this. Big difference.
Yeah, interesting. Seeing a few questions come through here on the Landlord Studio side. We'll keep those till the end, but yeah, keep those questions coming in, particularly if you have any questions around these stats as well. Want to just sort of jump into that next part of, particularly around the average cost. So, from the data set, Martin, the average landlord was spending about £3,300 a year, 13 hours a month on tax admin, depending on obviously the property portfolio size. Do you think that's a necessary cost or something wrong here? What would your expectation be here?
I've got to be honest with you. I think what happens here is, it's, without sounding too kind of nerdy, I think it's a categorization error. I think there's a lot of admin as a landlord. I think the tax admin should almost fall out of good admin. What I mean by that is, I presume people are tracking their income and expenses anyway, regardless of the fact that you need to submit them to HMRC. So, at our most, we had 11 properties self-managed. I legitimately think it used to take us 2 hours a month, and often no time, to manage those properties and track our income and expenses. So it's possible that everyone you asked is much bigger, but I think statistically, Kate will know better than me. I think the average landlord has got way less than 11. That's not a boast. What I'm saying here is, you look at the admin we managed to do and do everything right, we were spending way less than this. So I think a lot of people are possibly being forced to become better at their overall admin, and then putting that onto the shoulders of tax. Whereas it's possibly just that they weren't keeping that good admin anyway. Now, I don't want to sound like I'm saying landlords are all terrible record keepers, but also in my experience, there are a lot of shoe boxes that come into play with, boxes full of Wix receipts. So getting ready for MTD isn't really a tax admin issue. I think it's just picking up that better admin that was probably always should have been there. And also, if you look, I think, if you break that down, it's like £20 an hour. You could literally pay someone £20 an hour, and they would run out of things to do very quickly. If you had a virtual admin or someone like that, they would very quickly be saying, you're paying for these hours and I've got nothing to do. So again, I think there's just efficiencies and ways that hopefully will be flushed out by this. And lastly, sorry, I don't know how much you want me to say on this, but paying for some software, if you're paying 20 quid a month now for some software, you should be saving a lot of time through not having to key out into spreadsheets, making typing errors, and then keying them into tax software again. You should be saving at least an hour a month with the right software, which I'm not sure is necessarily reflected in here. To see the increase in the cost of the software without seeing that they're saving a couple of hours or an hour a month as a minimum. So again, I think there's categorization issues here, which would be interesting. On the raising the rents, we're businesses. If things cost more to run those properties, obviously we would pass them on. No one seems to criticize Tesco when fuel costs go up and then food prices go up. But we seem to get stick quite often for rightly passing on the cost of running that rental business.
What do you make of that, Kate, about the compliance cost side, and how 9 and 10 landlords say the compliance stuff's going to push their rents up? What's your sort of thoughts around that?
I feel slightly differently because, listening, pretty much read every survey that ever goes out. And I think in our market, we tend to have quite knee-jerk reactions, and they tend to be quite negative. Any change, there's a negative response. But the reality is 2/3 of landlords still don't increase rents typically while a tenant is in a property over a 5-year period. That could reduce your real income by about 20%. People forget that. I think that's going to change. And I think it should change, because I'm a great believer of small increases in line with inflation of earning. It's every year. That's how housing associations work. That's how everybody else works. But I don't think it'll be due to this, because I think it will save people time and money. I think it'll mostly be due to the Renters' Rights Act. And if it isn't due to this, it'll because people have a better understanding of their bottom line because of making tax digital. And the work they're doing. So that's where I think we're at. But I don't think this in its own right will push up rents.
Do you find that are there any costs that landlords don't typically anticipate coming into particularly end of year tax time, that again, sort of what you're referring to, if you're understanding these numbers, you should be on top of their overall bottom line? Do you find any particular costs that just jump out at them right at the end of the tax year? Maybe you, Martin.
Yeah, what's interesting is, and I haven't said it yet, if you're going to report to MTD exactly the same things you used to keep track of on a spreadsheet and then report at the year end, you're probably missing something here. Because one of the things I did for a couple of years is go around and ask landlords basic questions. Buy a house, put a kitchen in, can you claim the cost of the kitchen replacement? Very everyday things like that. And I mentioned in the full report, the average score was 3 out of 10 on those really basic everyday questions. Using the fact that most people don't have a clue what they can claim, the reality is most people don't then claim a lot of things they should claim. And I think there's a danger here that if you're keeping a spreadsheet, you're obviously tracking the mortgage cost. You probably catch your insurance, your year-end gas checks, the obvious things. But intangible costs that don't turn up on a bank statement are probably missed. So things like providing for your own time, travel, doing your inspections, share of your home expenditure, those types of things are often missed because they're not a physical spend. There isn't a receipt in the shoebox, as it were. So yeah, people miss a lot of those things, but also people miss the £8,000 kitchen refurb because they just didn't know they could do it. So yeah, there's definitely a lot of things that don't get caught. Equally though, a lot of people just blindly put their full mortgage repayment in, even though if it's a repayment mortgage, you can't claim the capital element of the repayment mortgage. So it probably goes both ways. And I think HMRC, if they use this data correctly and properly, will have a bit of a field day catching those people. But it's worth bearing in mind, it's not in their interest to go and remind the other people of the things they should have claimed. So, yeah.
And I'll tell you what I'm always really surprised at is the amount of landlords I talk to that have realised they've missed payments, that rents come in or not come in, and they've only gone to check it once a year and they've realised that 2 payments have been missed, and they're
It's
like
a bit
always
embarrassing
coming up
going back, yeah.
yeah, exactly.
Send a text to Jane, I realise you didn't pay your rent in July 2025. It's like,
Yeah.
it's like, I mean, Jane knows she didn't pay the rent, but she thought she got away with that now, or possibly moved out, you know?
Yeah, or even they've forgotten. It's
Yeah.
something that happened to might be on holiday or something. They didn't make the payment, and it is surprising. I remember a guy, and he'd come. I think he said he'd just gone back through 5 years of rents, and he'd missed about £8,000.
Wow.
What should I do?
It
Well,
happens the other way as well, Kate. It happens the other way because what one good thing now is, in theory, you're catching your expenditure on a quarterly basis. So you're much more likely today to remember what that Wix transaction was in
100%.
June than if you leave it until, because ordinarily you wouldn't be looking at now until you do the 27 return, which might be January 28. It's almost impossible to remember what that Wix receipt was then. So there should be a lot of people claiming much better expenditure, spotting their lost rents much sooner, realizing they're not making the money they thought they were, hence doing the annual rent reviews they always should have done. So yeah, people say, what's the positive to landlords? There are so many positive
Huge.
based on you just said, Kate, was it 2/3 of people don't put the rent up in a 5-year tenancy?
Yeah.
This will surely help because you'll go, I've never put that rent up. Let's try and make some money. Yeah.
Interesting. That kind of is a good segue into this stat on, almost 40% still on spreadsheets or paper. Top challenges are accurate records, errors, penalties, time. Kate, what's the single most common mistake or misconception that you hear, and what's your advice on landlords moving to digital tools? I mean, ultimately, part of MTD, there is a compliance change here, but I guess what's your sort of thoughts here?
So I think this comes down to what you and I have been chatting a lot about, which is that we're kind of talking about making tax digital, but that's just because that's what it's called and there's a government initiative. This has got nothing to do with making tax digital. And I know, and we know from the last show we did, the majority of landlords, and this isn't a critique because actually I don't think there is a good enough service there, is managing your property wealth alongside and in tandem with other monies that you have. So the biggest mistake I see is that many landlords think that you are taxed separately on property to the rest of your wealth. So when you see, I mean, Martin, you must see this as well, and the amount of eye rolling I do, I have very healthy eyes for the muscles I've got from doing it, because you go on and somebody pours in all of their data on their property. I've got this. Can somebody tell me what capital gains? And it's like, just don't, first of all, put that level of information online, for goodness sake. But also, for crying out loud, it is really important. When people invest in a property, even if it's one, it's hundreds of thousands of pounds typically. Even if it's £100,000 property, over time it'll be hundreds of thousands of pounds. Can you imagine trying to run a business without managing all of that, and without using a software, and without using an expert to help you, and without managing your cash flow and doing all of this kind of thing? You just wouldn't do it. And HMRC doesn't care how you earn your money, be it capital gains or otherwise. You've got it's all in one pot as far as they're concerned, and they will apply their percentages accordingly. So the biggest thing for this does for me is it means that we can bridge that gap now between paying tax on property and getting people to understand their property wealth, how that fits in with other wealth. And the most important thing, which is also rarely done, again, thought you did a great job at the panel we did, a landlord investment show, was to actually show how property compares as an investment return to other things. So a lot of people invest in property for a pension. Well, that's fine, but are you comparing how your property return is net versus a pension? Because I don't think most landlords are. And that is really dangerous at the moment when we've had inflation come through as it is, because that can erode your money like that. And I'm not sure that everybody is looking at that. So the biggest mistake is not wealth managing property and other money and making sure you can pass it on to people. And that's the biggest thing that I think that this can overcome.
And sort of just some commentary to that, just some context for the audience. As a part of doing that, I mean, really understanding the numbers of your property is important for this, particularly if you work with a financial advisor, because ultimately, if you track your finances or transactions, bookkeeping on every property, very tightly, it helps other people advise you on where to put money and how to consolidate and move investments around as well. But yeah, Martin, sorry, go on, Kate.
I can guarantee most won't have a financial advisor, because I know that most invest in property because they don't trust them. But if you've got property wealth, you should have a financial advisor. and a property tax expert. If somebody can do both, great, but often they don't do that detail side of things, the likes that Martin would do, for example. And what this means is that you can give them accurate information about how your property is doing and the returns, so that when they're saying, well, have you looked about this, they can analyse that better for you. And so if there's one thing that should come out of this, it is that actually you do need a team of people around you who are good at this, because there's lots of ways of mitigating tax that nobody will know about if you don't have a financial advisor. I am gobsmacked at how much you can mitigate. Really am gobsmacked, particularly when you're passing money down. And that's how the rich stay rich, right? And just one property means that you're well off. Just one extra property, it means you're well off. And a lot of people don't think like that.
Martin, do you have any sort of thoughts on this, or insights, or things you've seen?
There's so many things I could talk on there. Kate mentions a couple of interesting things, though, yeah. And actually, on getting the right people to help you, what I always find amazing is people will happily pay someone to come and cut their grass, clean their house, walk their dog, which are all things that actually we all could do, but then will not pay a financial advisor to do a report on retirement income, or, shameless plug, tax advisor to help save possibly six-figure inheritance tax on passing property on, or a letting agent to help them get £200 a month more on their rental property, or a solicitor to help with an eviction. And yet we'll gladly pay someone 25 quid an hour to come and pick the dog up every day and walk their dog for an hour. Now, I know I'm comparing apples and pears there a little bit, but yeah, the old thing about people always kind of say, well, a good accountant or tax advisor really will save you more than they cost. They will, but also they should help you make more as well. It isn't just about saving tax; it's about the common sense things. Well, I see you haven't done this. Do you not do that? And I think that's why, in a perfect world, you get someone who is a landlord and does the thing they're advising on, because then they understand your market and can advise on their specialist topic. So yeah, it's much easier for me speaking to people about ASTs, Resi, HMOs, AICRs, because I know what those things are. You haven't got to have a translation from your market to the advice you need. So yeah, I don't know if that's kind of answered the question. I wrote down 10 other things, but we probably haven't got time.
But Martin's right. One of the things I love about property is that people's view on it is completely different to. I'm a chartered marketeer. I have never worked in a market like this, which is why I love it, because it's bonkers, quite frankly. People make really odd decisions, and Martin's put those in. But exactly right. Get people around. Somebody will knock on the door and say, "Oh, I've seen a tile. I'll do it for cash." You what? Why on earth would you let anybody work on your property for cash? They're not paying tax, they're not paying VAT, and people think they're saving money. But if something goes wrong, and your roof probably doesn't need fixing anyway.
If I can jump on there, yeah. Ignoring the risk of someone who's probably uninsured and all of those things, you pay someone £1,000 to do a job, you can't then claim that, which means if you're a 40% taxpayer, you've just lost £400 of tax relief. You could have probably got a fully insured, fully legitimate 5-star business who might have charged you 1,100 quid with guarantees and everything else, and got the tax relief, which would have cost you less than £1,000 anyway. The economics of landlords are often baffling. So yeah,
we could do a podcast on this, Martin. This will run on.
Yeah, no, it's probably not a bad shout. Yeah. Anyway,
I think I did a podcast on this about 4 or 5 years ago.
Oh, there you go. Always ahead you are, Logan. One step ahead of the market, mate.
But it's still around 6 years later as a topic, so
it is.
It's slow moving. Here's a stat that came out which kind of surprised us a little bit around how a lot of people actually, or at least half of the people, expect MTD to help them improve profitability, which is quite interesting because, a lot of people aren't actually prepared for MTD, but they think it's a good idea, and they think that they might be prepared. So it's sort of a bit Yeah, a bit sort of confusing there around what people think and what people are actually doing. But I guess, Martin, half of them don't realize how much help is available and how much MTD could improve profitability. I mean, just to put it sort of plainly, like, what should landlords be asking
Um,
their accountant right now? Whether it's to do with these different types of topics or whether they can get support or
I
all
think
these different things around MTD.
if I can say this quite generically, because it applies to MTD as well, I think a lot of people have an accountant, and again, it's a tax advisor. Really, is what you should have if you just need tax advice. An accountant isn't the same as a tax advisor, but we'll just say accountant generically. A lot of people will predetermine the information they send to that advisor, who then can't imagine the gap in the information you didn't send. So they won't know that you've done a £5,000, roof repair because you just didn't tell them about it. So what I always say to people is tell them everything, pay them a little bit more and let them work out what should be in or not in there. Okay? Because if you're cutting off half of the information supply, you can't then expect someone to fill in the gaps. So send everything, have a bank account where you put everything through. MTD helps with this. Single bank account, all income and expenditure from there. Every single thing ideally paid through the bank. And then you will immediately just see a better understanding of how your property is doing. Because at the end of the month, the quarter, the year, there'll be money in there or there won't. Whereas if you've just got, well, we pay some things out of the household account, we sometimes put the rent in. If we get cash off a tenant, we don't always remember to pay it in the bank. Well, you're instantly just cutting off your own information supply and won't know how it's doing. So, yeah, I think the key thing is just have a proper full discussion. And often people, I mean, I say to people, if you're paying less than 150 quid for a tax return, you're wasting money. You should probably just do it yourself. Because for that kind of price, your accountant is just submitting your figures and not giving you any help. So you may as well not have an accountant and save 150 quid. So have a proper discussion about the work that's going into the help you're getting, just the same as you would with your agent, just the same as you would with the roofer who's coming or the guy who's cutting your grass or whatever. You would ask them what they're doing for their money, have a proper discussion. And I think this is a good time to say, everything we're doing is changing. Let's go have a reset on that relationship. Let's get to the bottom of what you're
Yeah.
actually doing and why it's going to cost more or less. And it's just a good time to have a conversation, I suppose.
Yeah, it's great advice. And I guess last question, Kate, from your opinion, your perspective, is MTD a good thing for landlords? Just to sort of summarize everything.
I think it's one of the most positive changes. Goodness knows we have had many and scars and all sorts of things over the last 20, 30 years. I've made a very nice living out of it, so very grateful because boy, I could produce content left, right, and centre in this market. So the really good, I think this is one of the best changes, the very best changes. And I think that a lot of landlords who are doing a great job will realise that actually they're not necessarily running it as much as and it is said a lot, as a business as they should. And I actually see lots of small businesses. I work with lots of people who run small businesses, and I'm constantly saying, I know you're not making any money at the price that I'm paying you. I just know it. And I think it's the same for people in property because the costs have gone up so much over the last sort of 10, 15 years. And we've seen the inflation rise as well. And when you then look at the numbers of what rents have gone up by, I can't see how it can cover those costs. And what's frustrating is that because they hold on to that same rent over a 5-year period, say somebody's renting for that amount of time, they're down by 20% if you look at inflation now, and not knowing that. And the cost of repairs and stuff, that's all going up. So I think this will be, and I think landlords will go, I am really, really glad. So for me, work on this now. I'm doing it now. I don't have to, but I'm doing it because I'm like, oh, good. I'm rubbish at this admin thing. I hand it all over to my accountant. I don't really have time to check the numbers because I'm checking everybody else's. So classic builder. And as a result of this, it's really, really going to get to grips. And if you do use something, check. You've got the 50% don't know the support. Choose it based on the support you get. Because if there's somebody on the end to help you, and if there's somebody offering other help and advice, not just giving you a piece of software to do MTD, that's, or whatever the software might be, that's the way I would choose them.
Nice. Love that. So that, those are the 4 sort of panel questions I really wanted to go through today. But I really want to just get a closing remark from both yourself, Martin, and Kate. For landlords that may be struggling right now, or are confused, or, wondering if this applies to me, or may have a different opinion about anything that we've said. Martin, what would you sort of say to that? What's your sort of advice, key takeaway advice today?
If you're not sure whether you're doing this right, whether it applies to you, when you need to do it, I might regret saying this, but most advisors offer a free initial chat, me included. And I genuinely have probably 5 or 6 of these per week where I say, you're okay, or you can do this. You don't need professional help. Here's a couple of links. You'll be all right. And I think there shouldn't be a reason not to reach out and ask someone. And at the risk of sounding pro industry and anti-technology, remember, if you're Googling the answer to something, or you're asking in a forum, or you're asking AI, it will only answer the question that you ask. Whereas a person will say, what are you doing? How long are you going to be doing this for? What else have you got going on? They will have a much better, deeper conversation, whereas more likely to answer the question. On the whole, though, I think MTD is a good thing. I think it's the same work you should always have been doing. You're just having to submit quarterly. I genuinely think this should add no more than 20 minutes per quarter. If it's adding more than that, you're either doing it wrong or you were doing something wrong. So, yeah. And again, I might have just alienated people there when I'm saying you were doing it wrong, but this is 20 minutes per quarter. It should really be that simple. If it's more than that, again, reach out. You might be doing things you don't need to. I will happily have half an hour and set you right.
There you go. Martin's put his name on the line for a chat. So definitely reach out to him. There's a lot of options out there, a lot of support. So how about yourself, Kate? What's your sort of closing remarks here?
I think the main thing is you do need somebody by your side. So, I have a financial advisor, I have my accountant that deals with the tax side of things, and I have my ways of keeping up to date with the rule changes. Because don't forget, we can talk about all the rule changes today, and they could change in blink of an eye, but also every budget. So we know when the next budget is going. Every landlord should be glued to that budget, or glued to somebody like myself, who will report on that budget as to what the changes are. And they might take a week for them to come out because it's a pretty thick document that gets produced. So bear that in mind as well. Don't rely on the news because you'll just, or even AI. I love working with AI, but it's not the equivalent of a search engine. I've worked with it for 18 months now. It's really important to understand that. It's not even just about it. You can ask it questions and it will tell you porcupines. Lots of them. So if you don't know much, you are, as Martin says, get to talk to somebody. Look at the shows that are around. Look at people who are online who are doing a good job. There's plenty of sort of accountants and tax advisors that will chat to people. But I do think if you have not had a half an hour chat with an advisor, financial advisor and a tax advisor in the last 12 months, get one. And if they'll do it for free, even better.
Can I just offer one last thing quickly here? I posted on LinkedIn that I think a lot of the accounting industry seem to have mistaken MTD, it's Making Tax Digital, as manufacturing tax drama. I honestly think there's a lot of complacency in the sector that has led to a lot of the issues of people trying to get over the quarter line. We've known this has been coming for literally 10 years, and we've known definitively for a couple of years now that like your accountant should have been reaching out to you a year ago to say this is what you need to do. And again, that's why I think the 150 quid tax return isn't the same as advice. Like, and if you weren't getting that, you should be saying, well, why did I not get that?
And if you've got a good letting agent, they'll have a little system, and they should be looking at linking in or something. So that's a good letting agent would make sure you would not have missed that deadline for sure.
Yeah.
Cool. Well, appreciate both you and all your insights around this as well. If anyone in the audience hasn't sort of jumped into Landlord Studio to try it out, definitely jump in. Free 14-day trial. You can see how it all works, how it's all structured by property, which makes just accounting for each property business a lot easier. So jump on the website and try it out and see if it's going to be suitable for your business going forward. And if you've got any questions, you can always reach out to our help team as well. Just going to move into Q&A. I've seen a few things come through, not heaps, mainly on some of I see there's a few technical questions around Landlord Studio. If you are on Landlord Studio and you're needing some technical support, it won't be the best place for me to answer this stuff right now. So I suggest just reaching out to our support team, help@landlordstudio.com. I just dropping that in the chat. Otherwise, when you log in, there's a chat function on the right-hand bottom corner. Jump in there. Our team will be more than happy to help you out with those things as well.
I've tested those, by the way. I've tested that and it's really good. And I'm a real numpty when it comes to things like this, and they got me over the line.
Yeah, we got Kate on the call with Amy, and Amy did a great job.
Yeah, fabulous.
There was one here, Martin. Total income is under 90,000. Did a 2-line submission. So this is a simple making tax digital submission. And I guess total income, total expenses. Was this correct? Was this not correct? Now, I've seen some stuff online about an 80K threshold being for a non-consolidated return. Maybe if you've got any insight on that, feel free to jump in there.
I've got to be honest with you and say I'm happy to answer questions, but there's so many other background questions you need to ask here. I don't know what else is going on. For all I know, you've got a vintage business selling 20 grand a year of, stuff. Well, that 20 is also included. Somebody else also asked a question about updating errors, though. And if I can answer both of these, probably in a similar way, there are so many easements at the moment that mean you don't have to submit full figures. It's worth just making sure you understand the easements. There's easements for if you've got a repayment mortgage, easements for if you've got joint property, easements based on size and thresholds. It's worth just making sure you understand those easements. Think of them as concessions while the system beds in. And it's also worth bearing in mind that we're not actually submitting 4 quarterly updates. We're submitting 4 times at quarter ends, but your next update is actually 6 months worth of data. The one after that is 9 months worth of data. The one after that is 12 months worth of data. So if you've spotted an error or you get something wrong, just correct it within the software. And even if it was pre the quarter that's already been submitted, it will then just be reflected in the next update. Because it's a 6-month update you're sending in next time. We're just calling it 4 quarters because we do it on quarters of the year. So I don't know if that, I can't answer the specific. Reach out. I'll happily guide you on that. But to answer that and the next one, if you did get it wrong, just get it right for the next time and you'll be fine. And then one last thing is someone said when you do the annual adjustments, which might include things like your own time. Now, someone said, can you claim for time? I don't mean your time. I mean the things you spend time on, like travel. So if I'm driving an hour looking around for a pipe fitting for something for a property, I can't claim my hour of time. What I can do is claim the travel cost of getting around there. I can claim my percentage of the phone use, my home internet, my home bills. All of those things don't, like I say, there isn't a receipt for that. So that's all I meant. Unless you have another business like a company that is managing your properties, you can't claim for your time.
And hasn't
And
the
then the fifth
petrol thing gone
adjustment,
up to 55p now a mile? Because
55p a mile, yeah,
I was
for
chuffed to bits with
on
that.
up to 10,000 miles, yeah.
Yeah, that's
So
fantastic.
it's the
Makes a big
simple thing
difference.
there is I just keep all of my B&Q receipts, and I know how many miles it is from my house to B&Q to the rental property and back home. So I just count my B&Q receipts and multiply it out by the mileage times 55 pence. Dead easy. These things don't have to be onerous. And you can put that on quarterly if you want to, or you just amend it in the fifth and final submission, which is one of the other questions there. So I think that answers most of them, apart from the very specific question for companies. I don't know if you can pull that up, Logan. Sorry for putting you on the spot here. And just
Is it this one
so,
here?
Peter, yeah. What I would say, Peter, is if your accountant is qualified, they're probably right. And again, you need to know the value of the properties, because the difference between FRS 102 and 105, very accountant terms here, and I don't propose to get into it. There are different reporting requirements. The revaluation on accounts is very straightforward, though. You just say what the properties are worth. They'll be reflected in the balance sheet, and it's nice and simple. I'm not sure the fact that the previous four did or didn't mention it is relevant. It's perhaps, to me, more interesting that you're on your fifth accountant in 25 years. So I would just make sure your current one is good, qualified, and sector experienced is the way I would. And if they are, they're probably right. But without the specifics, I couldn't really give you any more than that. Sorry. Again, Peter, reach out if you want to. Happy to have a chat. I'm not suggesting your sixth advisor, though. I'm just, yeah. I would just make sure you get your current advisor to explain why it needs done. I think that's your easiest route there.
Yeah. We'll just take one more. There was one about year-end claims. So I guess this is the confusion between what a quarterly return or quarterly submission is and final end-of-year tax return is. So when do you bring in the claims ultimately?
What I'm saying to people is, because if you've got something that isn't a receipt, it doesn't show up on the bank, which means you don't obviously spot it when working from the bank. But there's nothing to stop you almost treating this like an expense claim. So if I know I've done 1,000 miles this quarter, and I know at 55 pence a mile, that's £550 of claim, why not just send yourself to your home, your normal daily account, the 550 quid? And then when it comes up on Landlord Studio or wherever else, just put, that was mileage. And then it can just go in quarterly. You just got to remember to do, I'll call it your expense claim, as if you would if you were doing a quarterly expense claim from an employer. So you can engineer a way to make it come up on the bank and then claim it, and it won't be missed. So probably setting yourself a little diary note, middle June, middle September, middle December, middle March to do those adjustments. We'll just get them in. If you miss them, just keep a note and do them on an annual basis when you do your final submission. And neither is right or wrong. It's just whichever way you prefer to do it.
Nice. Hopefully that gives you some good context to that. But yeah, we'll be sending out some resource around this. But again, definitely worth reaching out to Martin or another tax advisor just to clarify any questions you have on your particular situation. Going to wrap up there. Just want to cover off another upcoming webinar which you may find useful. Just managing student tenancies. So peak season of student rentals as we approach September, October. So if you want to understand more about that and the new laws, particularly around renters' rights and all that sort of stuff, jump on that webinar. I'll be hosting that. But yeah, I just want to say thanks again for joining us today. And I guess if you take one action after today, make make sure it's this. If you haven't registered for MTD and you are in the 50,000 threshold, make sure you sign up. Don't leave it any later before you start thinking about MTD and which software you're going to use. Again, we do have a ton of resources on our website for MTD, renters' rights, everything related to all the different regulations and things that are coming out. But just want to say thank you, Martin. Appreciate all your insight, and Kate as well. Appreciate all your insight. Yeah, always great to have you both on the webinar today. So, yeah.
You're very welcome.
Appreciate you guys joining.
Thanks for having us.
Thank you very much. Goodbye, everyone.
See you later. Bye.